Hello, folks. Welcome back. This is our non-farm payroll Friday commentary for the ICT Mentorship for January 7th, 2022. All right, so we have the dollar index here still inside its consolidation. Had a nice expansion on the downside today, still staying inside of the range in here. And painless, even though I'd prefer to see a rally higher. That's the side of the marketplace I'm sticking with. I'm demanding the market prove that it is not willing to go higher. It hasn't done so yet, but even with this event here, non-farm payroll, we don't worry about it. We don't participate or engage. Had a nice little expansion on the downside. Created a nice opportunity for intraday volatility, higher for euro and cable, but painless. There's no regret. There's no fear of missing out. There's no I wish I would have been a part of. It's completely detached, emotionally, psychologically. And that's what you should be feeling. So we're going to be watching to see what it does going into next week. Again, if it needs to come back down in here, this level, it's kind of like the line in the sand. I wouldn't want to see it go through that. If it did, if it came back up and found some resistance there, then that would be likely to see it trade in here. I don't see that yet, but it's certainly possible. If I'm incorrect, that's most likely what would be the catalyst for a run into this area here. I'm just looking for the range to be maintained, and then we'll see what we get next week. All right, here is the hourly chart on dollar. Now, I mentioned 2 videos ago that this area had my interest, and I mentioned how last night it ran into that first, where I would have rather seen it go down to pick up a discount, then go to that level. So this was problematic, and I mentioned this in discussion last night, how this is not likely to bolster continuation if it goes there first. If it drops to a discount first, then goes for that, that's, from a narrative standpoint, that's better. That's ideal if you're bullish. It's harder, it's not impossible, but it's harder for a market to run to a premium, then discount when you're bullish, and then see it continue higher, especially in a range consolidation that we've been maintaining for a dollar for this long. Non-farm payroll event here. So the market creates its short-term high, then it drops, attacks the sell side here and here, and there's a small little imbalance in here. Now notice back and forth, all the candles having worked both sides of the marketplace until we get to this one single candle. So that exposed area here, we see it trade down into that. I think that's interesting. So overall, it's 10, 20, 30, 40, 50, half a penny move on a decline on non-farm payroll. Not bad. 15-minute time frame on dollar index. Again, small little ramp up into non-farm payroll numbers. And they sent it lower. Small little fair value gap in here. Fills in that and reaches down into that hourly fair value gap. Euro dollar worked a little bit deeper inside that candle I was mentioning the other day. So range expansion here. If it continues, watch this imbalance here. I mentioned that a couple weeks ago. So if we do get further upside and weakness on the dollar, look for this area here in this bearish order block to be traded to. All right, euro dollar hourly chart. You can see we traded back up into this run. This, I think this was the 2-hour chart that created that imbalance, and we returned back into it here. So all in all, non-farm payroll sent it higher, and I would never been a participant in that move anyway because it's NFP. All right, euro dollar 15-minute time frame. Again, just the carnival ride. Nothing in here I really like. I would have rather seen it drop down, sweep these lows, than if it started to rally and create some kind of a fair value gap like we got here. Then I would have been using tape reading exercises for a run higher, but just dropping into here, that's not enough for me. Just nothing in here really frames it well for me to anticipate that type of move. So it is what it is. And the pound, I mentioned this bearish order block would be likely the draw if it was to continue higher. Just fell short of it so far again for today. The market's still trading at the time of this recording, but I don't think it's going to likely get up there by then. But we'll see. So I'm not certain what this pair will be reaching for once and if it hits this. So again, hands off, I'm not touching cable. And British pound versus US dollar hourly chart. Again, nothing in here has me, except for the order block here I mentioned the other day, reaching up into that imbalance and bearish order block. That would be the next short-term objective, and it's not that far away, obviously, but again, just for journaling purposes, I don't have anything in here that is strong to support any kind of real entry. So it's, again, non-farm payroll, typical. We don't participate, and there's nothing in here that you should be fearing that you missed participation in. All right, so about right in here is where we were in the presentation I gave you last night, and then just consolidated and sent it higher on non-farm payroll here. So I don't have anything exciting, obviously, and I don't want to build up any kind of expectation or excitement. We're waiting for January to form some kind of sentiment that gets things moving on a larger term macro basis, and leave these dealing ranges that dollar and euro are being held in. So again, just a casual reminder, that's what we're looking for, waiting for that to occur, and until that happens, we're going to keep things light and short. Until I talk to you on Monday, enjoy your weekend and be safe.